So now we're going to apply these concepts, but we're going to start to bring in sort of more multi-time frame analysis. So we're going to go through a few price action examples that we went through before in the advanced market structure module where we did that walkthrough. My intention is to not make this video as long as that, so you're not going to have to sit through 2 hours of it. I'm just going to go through a few examples, make sure you guys are kind of comfortable, I guess, with the framework that we're using, and then I want you guys to then go away and obviously practice it yourself. So without further ado, let's just dive into it. So daily chart, let's make sure we kind of know what swing structures we are playing within. So this was, one big clear swing push down, so we can be pretty confident that that is our nice swing low. Price then came up to the upside, but it failed to break and close above our swing high. Right, so therefore we then got a continuation of that daily bearish swing trend. So, if we continue to draw on our bearish bosses as we usually do, and we know where our swing highs, our swing lows are, what I was saying before, right, is market structure and order flow in the form of supply and demand ranges, they're all one and the same thing. They are all slightly different techniques of literally showing you orders going through the market and where supply or demand is in control, right? So, very simple. It's easier rather than just words, just to visualize it on the charts. That's what we're drawing onto this price action to make sense of it. So what I mean by that is if you draw from the swing low, right, to the swing high of that range, and you drag it across to where you break, right, that was that swing range there. And that is just one big supply range. And that's it. We already knew that with market structure, right? When we would put on our, pretty circle for our swing low and our pretty circle for our swing high, and then, we would drag, when we did the box tool, right, to know where our swing high was, we drag it across to where it was broken. Where's the highest point that took out the low after it was printed? That's our swing high. Well, again, it's just another way of visualizing that's our whole supply range. So then when price pulls back, we expect this supply range to hold, i.e. we expect that strong high to hold and that strong low, that weak low to then be targeted. So then we get a continuation of that trend. Let's get rid of these circles first. That's not going to work, so we have to draw another box from the low to the high, right? Drag it across, and we can see the continuation, of that overall bearish order flow. And again, we get another break of structure, and then that brings us to the current range that we are within. Obviously, then there's another small one there as well. So for me, I'm classifying this as one big push down. When we look at the recent price action, we can see we had a leg down, pull back up, leg down, pull back up, leg down, swing, pull back up, right? And then classifying that as one leg down, and that's more of a 4-hour pullback. So what does that bring us to the current point in terms of just thinking about the daily chart and order flow? Well, if this, let's use the highlighter tool because it'll be a little bit easier to see the swings. Swing high, swing low, daily swing low, daily swing high. And then this is, we're trying to find out where that lower low is going to be in the daily chart when we actually get that significant daily pullback. So at this point, if I was, looking for that, it would only be once. So remember, let's think about it this way. After a break of structure, what did we always say? We would say that a change of character would signal that a swing pullback is about to start. Right? Now, whilst that is still true, what we're using now, we are now saying that a chock is simply just to signal an internal pullback. So if we were to get a little, pullback like that, like 1 or 2 candles of that, and then price broke up to the upside, okay, that would be a daily change of character. Now that's the first aggressive signal that we may be getting that daily pullback to then continue that overall daily bearish swing trend. But for now, or how we use it now, is a change of character simply just signals that we're getting an internal pullback. Okay, so this here would be our last daily internal pullback, right? That would be there, your daily bearish internal break of structure, your daily IBOS. So if we were to then get a little daily chock like this, right, that would just signal a pullback into this level here. So this would be your strong daily internal high, right? So if we get a daily change of character, that's just what we would assume. We're probably just getting a pullback into this level, and then we would look for a daily bearish chock to confirm that this strong internal high is holding, and then we would target this daily weak internal low, right? And that's essentially just what we've been using with advanced market structure. So then if we were to get a move like this, that then broke the daily strong internal high, then that would be our sort of true confirmation that now we're going to get that daily swing pullback, right? And we would look at the daily internal structure like this, okay? Now we could come up into this extreme daily swing high. And what would we expect? We would expect this daily swing high to be strong, for it to be protected, for price not to break it, because we expect the daily bearish swing trend to continue until it doesn't, right? That's the basic framework we've always used, okay? So as price then comes up into this extreme daily supply zone, right? Now let's say we get like 1 or 2 candles, like a tiny little pullback, which we now call a fractal pullback, right? Price moves up and then we get that chock. So you guys should be very familiar with that. Before we would say, okay, we've had a change of character, we're in a daily extreme. Now it's all systems go to target that weak daily swing low to get that daily swing lower low, right? But now we know, or the way we're viewing it, is that although that is that first sign that that may happen and the daily lower high is formed, and now we can target a lower low, at this point, we don't, I'm not going to get short and just hold full volume to hit. Because at this point, all I assume, or all I use that change of character signal as, is it's just to have a pullback to this low here. Why is that? Well, if we say that that's the internal structure, okay, so we can use these lines here. I'm going to try and take this slow so you guys can follow me. I know some of you already know exactly what I'm getting on at here, but so let's take this again, right? So I was saying that that was the daily internal pullback. All right, so this is currently the daily swing high. We're about to form that daily swing low at some point. If price then breaks up and takes out this daily internal high, the daily internal structure is now bullish. Okay, so then we can look at all of these bullish IBOSes, right, as the daily then has that bullish swing trend pullback. Now, if it comes up here and then gives us a little change of character, right, so make that like that. Let's use these dots. So this is like the internal structure. Okay, that's not going to work for me, so I'm not going to bother with that. It's still a bit glitchy in TradingView. But essentially the point I'm trying to make here is that that change of character just signals that we're having a pullback to what? To this strong internal low. Because all of these, right, it's the same theory. This is a weak high because it failed to break any low, right? This is a strong low because it broke the high. So when we get that internal push up here and price is pulling back, we expect this low to hold. We expect it to not break. Likewise, we get another internal break of structure and then price starts pulling back. We expect this low to hold, right? This internal low. So then when my price moves up into this extreme, okay, we still expect, just purely thinking about this on its own, we still expect this to be a strong internal low, but obviously there's a higher probability that this low could now break, even though we still call it strong, because of where we're coming into, and because swing structure is the strongest form of structure, right? Its swing is the strongest, then your internal, and then maybe you have a smaller internal, and then obviously then if you have your fractal. So in this case, let's keep it simple. 3 types of structure. We have swing, that's the strongest. Then we have the larger internal, and then we have fractal, which is what we look at for chop, where we're looking at the little candlestick movements, okay? So as we come up into that extreme, we can start to think and look to position ourselves that the daily swing lower high may form, and we can target this weak low. But a change of character does not give us that true signal yet, because a change of character just signals an internal pullback, right? It doesn't signal a swing pullback anymore. Now we just say that it signals that internal pullback. So price could easily just come into this strong daily internal low, right? And then it could give us what? It could give us a bullish daily change of character within here. And then we would be aligned to go, okay, this internal low is probably holding, and now we can target this weak daily internal high, right? And that's basically the framework we are using. But once we get, or if we get, a break of this strong daily internal low, it's only at that point, once we get that break, that okay, now we can say that it's likely the swing pullback is over, and now we can take out this low, right? So a change of character signals an internal pullback, and then we could get another one, and then that would be the end of the internal pullback, and then we can target the weak internal high. That's the change of character. An IBOS, when we get the change of trend, the change of the internal trend, right, the larger internal swings, that is then what signals the end of the swing pullback, and then potentially the start of that new swing run, right? So this IBOS here, when the internal structure shifted from bearish, right, that's a bearish IBOS, that's a bearish IBOS, then we get the bullish IBOS. Now that signals the start of the swing pullback, okay? So if we got the little change of character down here, that just signals the internal pullback into this high. It doesn't signal the start of the swing pullback. You can still view that as the start of the potential of it, but it's only when we get confirmation. The internal structure is what gives us the confirmation of that, okay? Now, really, hopefully, you should have been hopefully comfortable with or fully understand what I've just spoken through so far from the advanced market structure module, but I just want to go over it again and again so it really, really starts to sink in, okay? So that's the advanced market structure concepts or frameworks we've been using. basically the exact same thing we've always been looking at. It's just all we've added in is the larger internal swings, right? Which we're now referring to as IBOS and all that stuff, okay? Cool. So if that was happening, wow, now we're going to overlay order flow, right? So at this point, let's concentrate just on the price action that we actually have. We know we've had what? We've had a daily break of swing structure. So at any point after that happens, we have to have in the back of our minds that a daily swing pullback can be happening. Now, obviously, price can fall a fair amount before that happens, but we have to still be thinking that that could happen. So at this point, we've had our last bearish internal break of structure, which also gives us this internal supply range, right? So what we want to see is we want to see that order flow shift. We want to see that order flow shift from bearish to bullish. We want to get that bullish IBOS. And then if that happens, we would then have what? We would have a series of higher time frame demand ranges where we could then draw that from the low to the high of where it would be broken, right? You can rein that in if you want to have nice chart OCD like me. And then you can continue to draw these ranges. And what would we expect? We would expect these demand ranges to continue to hold, right? Until they don't, essentially. So then we come up here. I need to turn drawing mode off. Can't use that. Cool. So that's pretty much it, right? So, it's the same way we would view it as structure. We would expect that internal trend to continue until it doesn't. Obviously, we can use other confluence to anticipate when that may change, i.e. coming into the strong daily swing high, early sign of the change of character, etc., multi-time frame analysis, right? If this was overlaid with a weekly supply zone, right? They're all the things that we can use as early signals, but when we're just trying to use a simple framework, this is it. So then when that does change, then what happens? Then we go from having bullish order flow to now having the start of bearish order flow, where we draw it from the internal low to the internal high, drag it across to where it's broken. And now, still not going to let me do that, drag them across. Now we would expect these daily supply ranges to hold until we get down to the bottom of this swing low, right? And that'll be it. So I realized, some of you probably rolling your eyes at this point, come on, get on with it. But I really feel like it's important, especially for anyone who hasn't quite got it yet, that this is as simple as the framework needs to be. So just really wrap your head around it on one time frame, kind of what each rule means and the hierarchy of structure. So swing structure is your most important. So we're essentially expecting like the overall moves that we're looking for, because we've had that swing push down. We'll then be looking to trade the swing pull back to then trade the next pro trend swing run to the downside, right? So let's make that, say, blue for our swing structure. Within that, we'll have that larger internal structure, right? And we can map these supply and demand ranges within that. And when we get the bearish IBOS, that's when we get true confirmation that, it's likely we're going to get that next swing run to the downside, and we can target the weak swing low, right? And then we can use chalk as an early signal that that swing move is going to go. But really at that point, we only have confirmation that we're getting an internal pullback, potentially just into this strong low, and it could continue that movement and we could switch, bullish. Okay, so I really wanted to just get that very, very clear that that's kind of as complicated as it needs to be in terms of that. Obviously, as we go into the live market and then you start to overlay this with multiple time frames, whether it's even just 2 time frames or 3 time frames, and you start to look at the M1, things are moving quickly. You can get a lot of conflicting biases because you can have, the overall swing is bearish on a daily chart, but then you've got bullish internal at this point, and then the 4 hours doing one thing, the M15 is doing another thing. And that's where you can get almost paralysis analysis. So that's why, let's go through a few chart examples, but I spoke about this on the meetup. I believe that was on Monday, the 7th of June. If you guys haven't seen that already, where or maybe it was a Tuesday, I think, where I was basically trying to say, these concepts are here to help us to add to what we're already doing, which is focusing on trying to catch the highest probability kind of swing points, right, within the internal structure or within the swing high or low, rather than trying to trade every little single piece of movement. Because whilst we may have a better understanding of those tiny internal swings and where price is likely to go, doesn't mean it should be, we're trying to trade every opportunity, right? We still need risk to reward to be on our side, and we still want to be trading those, those high probable areas. But anyway, you guys should now be hopefully familiar with this framework. So let's dive into price action as it goes, and we'll kind of go from there, okay? So at this point, daily swings bearish, daily internal is bearish, and that's where we're at with that. So we would just expect, although we're ready for that swing pullback to happen, at this point, we won't assume it's going to happen until we would get something like that, where we would get that bullish internal daily break of structure, right? And then we would get that shift in daily order flow, and then we'd anticipate that we'd get a pullback potentially into that prior daily supply range, right? And then we would look for the order flow to then switch bearish, and then we target that low. That's it. That's the framework we're using. That's what you should be comfortable with from advanced market structure, but now we're overlaying these boxes. Sweet. So let's jump down to the 4-hour chart. And as you've probably guessed, 4-hour swing structure is not always, but it's very likely going to be basically that larger daily internal structure. That's what we're viewing by one time frame. And this is why I was saying, if your trading view for whatever reason froze and you were stuck on one time frame, you'll be able to do all of this multi-time frame analysis literally from one time frame if you zoom out enough. And you can kind of visualize that. So I'm just going to hide that daily line, and then we can draw on the most recent 4-hour swing structure here. Okay. And then let's put on our pretty little circles with our 4-hour template. Cool. So that's our swing high. So annoying that it won't let me drag and drop. This is our swing low. So yeah, this is the current swing range we are within, right? So let's put this, try and do some more lines just to kind of help us keep track of everything, as it can get a little bit confusing. So that is our 4-hour strong swing high. Hopefully that text is big enough to see on your guys' screens. Okay, so at this point we don't have anything on the 4-hour chart. We're literally just moving to the downside. We obviously know this is that daily range. So yeah, let's just kind of keep it simple and leave it like that for now. Obviously we will have some supply zones within here, but let's jump down to the 15-minute and see if we can look for that potential shift to play that 4-hour pullback up into this 4-hour swing level, right? So jump down to the 15, and where is our current swing range? So this would be our last M15 break structure, right? You guys should be pretty familiar with this from the last advanced market structure walkthrough. So this will be our swing high. And yeah, until we don't know where the swing low is, until we have a significant swing pullback. So we can call this an internal break of structure. Not the most significant, but in terms of recent price action, that's what we have to work with. So if we were going to look for that swing pullback to go at this point, we would need this high to break, right? That would be the high that we would be looking to go. This is our current bearish order flow that we can see is holding. So we have our medium time frame supply range, right, from the low to the high. So that's the prior supply range that we'd expect price to probably have a swing pullback into. And then we also have the continuation of that internal bearish order flow as well, okay? So let's speed this up a little bit, and then let's go through some actual price examples and see what happens. So we're just moving sideways at this point, and then we get that bullish internal break of structure, which is also where the actual chalk line would be, which obviously sometimes may happen, and that is now signaling that we are having our swing pullback. So now we've had a decent sized pullback. I can classify that as our M15 swing low. So at this point, right, let's think about it. Just keep it to one time frame so we can keep it nice and simple. We have an M15 strong swing high, and we have, this would be our weak M15 swing low, okay? We've had a bullish internal break of structure, which is also where the change of character line was. So now we have good solid confirmation that we are pulling back, right? We're pretty much already in the premium, okay? So from an order flow perspective, what has happened? We've had the shift from bearish order flow has now shifted from bullish, because if we draw the current range, which is from that high to that low, and we drag it across, price then broke to the upside, okay? So now we have some demand. Okay, so what's the expectation? Well, the expectation is that we'll get a continuation of that bullish internal order flow. Let's move this out of the way, right? We may come into the extreme, and then we may get a little change of character. Now at that point, that's our first aggressive signal that we can then target the weak swing low. It's the change of character would be the first signal that potentially the swing pullback is over, and we can target that swing low. So we can get in shorts, right? With the expectation that maybe we can get down here. But as you guys should know, the chalk only really confirms that we're just getting internal pullback, right? So at this point, this is a strong internal low. So what could price do? It could come in, it could give a change of character, and then we could target that weak high. But if we were to get a break of that internal structure, then what would we expect? We would expect, after having these demand ranges, and I'm going to draw it again, and I know some of you guys probably have this completely nailed, but we just have to drill it into our minds, right? Until we get really, really used to it, because there will be more complex scenarios. So at that point, right, where we get the change of character up here, we just expect an internal pullback into this strong internal low. But then if we do get that M15 eyeballs there, then what we'd expect? Then we would expect these supply ranges to hold, the whole way down, right? Until, there we go. Well, let me drag and drop these ones. That's a bit easier. I can speed things up until down here, right? Again, that's the framework we're running with, okay? I won't go over that again in that much, drawing it all out, because hopefully you should be familiar with it now. So that's literally what will be going through my mind if I'm looking at this and how we're kind of trying to use these concepts to help us make trading decisions. So let's play this forward a little bit and let's see what happens. So obviously we've had this quite large internal demand range. So we've had initiation out of the range. So what do we expect? Do we expect price to pull back into it, mitigate it and continue, which is price is pulling back into it now and then continues to the upside. Okay, so we have these smaller little ranges as well, right? From the high to the low, drag it across, price then breaks out. And then again, you have to zoom in a little bit here to see it. But this is looking at the fractal structure. We get these very small ranges because this candle fails to break the prior candle's high. So we do get a pullback there, right? And then price breaks out. And then what happens? And then we get a break of that little flow, right? So this is where we get that M15 change of character, right? We have an M15 chop because we got a little movement up, little movement down, movement up, and then we take the low, right? So that there is an M15 chop. So now we also have that small bullish order flow changes to supply from the low to the high, drag it across, and it breaks out to the downside. So this is a potential indication, like we were saying, that that swing pullback could have ended, that the bullish order flow has been disrupted. And now potentially what? We've got to have supply ranges that will hold until the low goes. Well, as you guys should know from the advanced market structure module, it's not quite as simple as that, because obviously we have a much larger movement like this, up, down, up. And now we get these little movements here, right? And then that's been disrupted, but that could be just what? Just to pull back into this movement here, into this larger range, because yes, it mitigated it here a little bit, but obviously sometimes it's going to want to pull back much deeper into these larger ranges, right? And then have a disruption of that small order flow and then continue up, right? And that's the larger order flow we're going to have to look at. So that's the difference between when you've got the larger internal structure and then the smaller internal structure, or in this case, like the fractal, because that's basically what we're looking at for chalk. Okay, so what we can do is obviously look for shorts within here, because we've had a sweep of liquidity, we pull back into the premium, we pull back into the previous supply range. There's every potential that the lower high could form. All right, we're trading pro trend. We've had a nice wick reaction. This is on Frankfurt Open, 7 a.m. London time. But if we're looking for shorts, we just have to anticipate and manage our expectations of what we think can happen, that it could just be a pullback into these levels. We've got some nice refined supply within here, right, to then continue up. So that's literally all it is. I mean, you guys should be familiar with it anyway if you've watched that previous content, because it's the exact same thing, except this time we're just drawing boxes on, which can kind of help just to visualize it sometimes. So even here, and this is what I'm saying, right? Even this is this low here, is slightly more convincing than the fractal low. So this is where I'd say this is like the larger internal structure, right? And then you've got the smaller internal structure, right? And that could just be that movement there to then switch bullish. And then you've also got the actual fractal, which is like looking at the candlesticks. So at this point, that's a bit more convincing. So yeah, again, you can look from shorts within here, but just be aware that it could have just been to pull back into here. So let's play it forward, and then it gets a bit volatile, and then we continue up, right? So that's where then I would view that as the continuation of the larger bullish internal structure, and we're moving up higher. So now we're coming into kind of extreme refined zones. So this is what I was saying as well in the notes, if you've hopefully read those, was that just like a lot of these concepts, especially like chalk, we want to be using them in areas that are higher probability that we expect price to shift, because although we had a pullback here, we had a sweep of liquidity, it was into the premium of the swing range, it mitigated the prior swing range, it's Frankfurt Open, we had a bearish chalk, all right, nice little bit of momentum. If that price action happened up here, right, it would be a lot higher probability. So that can give false signals, and that's why we still want to pair it with all of the confidence we've had. It's not just a case of, oh, well, now the bullish order flow has been disrupted, now we're just going to expect this to go, right? So yeah, you guys should know that anyway. So we're coming into here, and obviously we can drop down to the M1, look for our entries, blah, 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 blah. It's not about that. This is more just about understanding the framework in which we can use to aid our decision making. Because at this point here, let's say we're waiting for an M15 change of character, which would be this level. Although that can still be that signal that the swing pullback is over, we know now that this, I should probably be drawing these on just a bit slower just so we can keep track of this. So this is the M15 IBOS, right? So I'm kind of viewing that as the larger structure. So again, just to make sure we're all on the same page here, push down, internal push up, internal push down, internal leg up, internal pullback, and then that internal leg. So that's the next IBOS there, that slightly larger internal structure. So if we were to get this change of character here, it could just be what? In fact, let me use some nice lines that I've got so we can even keep track of it even more. That could be, that's the internal, strong internal low, right? And then this would be our weak, too many templates here now. Yeah, weak internal high, right? So this is what I mean by the internal structure. So again, if this helps you to live market as well, obviously it's going to be a bit slow on your back testing, but you can make all of these little templates so you kind of know where you're at. So I have a bigger dot, say, for your swing structure, and then you can have like smaller dots for your internal structure, so you can keep kind of tracks of what you're doing. So at this point, we've come into extreme supply, and we can look for shorts in one, etc., etc. If we now get a change of character, which we now have, that's the first signal that we could be getting that pullback, but it's not until this low goes, this strong internal low, that we get that bearish IBOS, that then I would say that we have really good confirmation that we're going to take out that low. And what do we expect? That we expect those large internal ranges to hold, okay? And this is the way you can map your charts in live market, which really may help you to kind of visualize what's going on. Because at this point, very easy, right? We could expect or anticipate that price might come into some demand within here and push up higher. But what you also have to remember, like I keep saying, is swing structure is king, right? That's the strongest one. So, you know, although whilst you can still look for longs from within here, you can't then be surprised as to why it then fails, okay? So here we failed. So now we get a candle closure, which is obviously key if you follow the same rules as me, because I need a candle closure for an IBOS. And then that is now, it was a weak, but now it's become strong because it's done its job. It took out the internal low. So this becomes your M15 strong internal low, right? So now we have had the break of this bullish order flow. What do we now have? We now have a bearish internal range. So from the low to the high, drag it across to where it's broken. And this becomes our M15, supply range. Okay. So now what we can do is we can look for shorts to anticipate that these internal ranges will hold, that this supply range will not be breached, that this strong internal high will not be breached, and we can look to take out the weak swing low. Because what's the framework? Now the internal structure has aligned with the swing structure, right? We've now had that pullback, and now we switch bearish, so now we can take out this swing low. And that's it, and that's, you know, I don't know, that's as simple as I'm trying to keep it, as I think we should all try and keep it. Obviously, we can start to bring this lows into lower time frames, and there can be a lot more complex situations when we get bigger and bigger ranges. But I think this piece of price action is just a very good example, you know, of really what we're trying to do here. Okay, so then we get another internal breaker structure here. So then at this point, let's get these on. I know it's a little bit slow to draw it all on, but I think it's really useful to do. And then we have another supply range, right? So what do we get? We got initiation, pull back into that prior range, so mitigation, and then continuation. And that gives us another supply range, right? And as we know in the previous one, we didn't get a break and closure below, so that wasn't a swing boss. And then we start to retrace aggressively. So obviously that's pretty strong bullish confluence that maybe we're gonna, you know, have a decent retrace here. But what is the framework that we're using with internal structure, which can really help us, right? In this situation, well, let's see. So what we were saying is that obviously you need to move this down when we get to the new internal range. So that becomes our strong internal high, and that stays because that high did do its job from an internal structure perspective. So although we know it's pretty bullish that we've swept here and we're retracing quite aggressively, we don't assume this high is weak yet because it did its job. Okay, so then this would be your M15 weak internal low, right? And then you can use that little dot there, right? And that would be the framework we're using. And you can look for shorts within here. This is the point I was trying to make earlier. You don't have to. Although that's our rule and we expect this low, this high to hold, you still have to bring in all of that other confluence and make a probability-based decision. So what I mean by that is that we have a framework to define that this is strong, but it doesn't mean that it's going to hold and we're going to trade from it because we've failed to take out the swing low. You know, and you should know from previous videos as well, we've come into a big extreme monthly level and we're potentially expecting that monthly pullback to happen, right? So when price then comes up and then it actually breaks that high, this is then your bullish IBOS. So now when we have that IBOS, this then becomes weak, right? Because this section of price action was bearish. It's now been disrupted. It's bullish. So now we expect the internal structure to stay bullish until it takes out that high there, okay? So at this point, the swing structure could still stay bearish because we haven't had a break below. So this is still a strong high. But at this point, this would be the framework we're working within. So the M15 swing is still bearish. The internal structure has now switched bullish. Okay, so now from an order flow perspective, from the high to the low, drag it across to where it's broken, we now have what? We now have demand is in control from the internal structure. Okay, so now we'd expect this high to be going, and we'd expect the green ranges to hold until it doesn't. Okay, so now this low was weak, but because it then took out the high, it becomes strong. So that's our strong internal low, and we can look for potentially for longs from within here. So expect price to potentially pull back down into the range. Okay, so this is our weak internal high. Cool, and then let's put our little dot on there. So this is what I was saying right earlier. If you're just looking at swing structure, again, there's nothing wrong with that. Shorts a pro trend. We've come into this potential M15 supply chain here, and you could look for shorts and they could play out. But you have to expect what? You have to expect, if you take any shorts from within here, that it could be just an internal pullback to mitigate this range, because this is our strong internal low. That would be our weak internal high. So those shorts here are pro swing trend. You just want to manage your expectations. It might be a pullback into this demand range for then an internal high to continue, right? And that's, literally how we're using it. There's not really too much else for me to add to that, really. So let's try and kind of concentrate just on the internal structure here and speed this up a little bit as best as I can. So let's move along. So remember, for IBOS, we need a break enclosure. And this is where order flow then can get a little bit messier at times, because for order flow, I pretty much just use a spike through, okay? The same way with supply and demand zone. So for me, if you draw it from the high to the low of the range, I know what we do. We drag it across to where price breaks out of it. It breaks out to the upside. So that would be your medium time frame, so M15 demand range, right? But we haven't had a boss yet, okay? We haven't had an IBOS yet. So let's move this along, okay? And then we get a break to the downside. So this is why order flow gets a bit messy, and I'll show you why in a minute as this plays out, and why I would pay more attention to the structure, because now we've got a break out of that. It broke the low here, so that would be your actual supply range now. And let me just drag in this across to keep nice and neat. All right, so now you could go, okay, well, actually the order flow shifted from bullish to bearish because the low broke, but structure hasn't. The internal structure is still bullish because we haven't had a boss yet. So this is still the strong internal low, right? And this is still the strong internal high. So that's why order flow is a little bit messier, and I'd pay more attention to structure first in this instance. And why this is literally just, well, this is where you have to use a little bit of nuance to go, really, we're just moving sideways, okay? We're pulling back into essentially this range here, and I'd be more, cognizant of the fact that M15 internal low could be forming, right? So let's move this forward a little bit. And this is where you can make this framework complex as well, because within that larger supply range, which we have here, so there's from an order flow perspective, this is where you could potentially expect that. But from an internal structure perspective, remember, this is the range we're working within. But then from within there, this is where it gets messy, right? So don't worry about this too much, but essentially you get a bullish chock after sweeping these lows. And then if you look at the little supply range within here, what happens then? That then switches bullish. Okay, so now you could say that's realigned itself with the larger bullish structure, make that demand range, and then you can look for longs from within here to target the weak internal high. So let's see what happens. Price comes in, and then we go, and then we get the IBOS. All right. Now we still have to be wary that the swing structure is bearish and we're coming up into the extreme, but so far the internal structure has stayed bullish. So our strong internal low now becomes here. All right, again, use the dots if it helps you to keep track of it all. Okay, and we're moving up. So now every time you get a break of structure, this is another way that can help you. Say yourself, we've got a new range, right? Just like we'd have a new structural range. Well, now we have a new supply and demand range. So you can always think whenever there's a break, you can draw a new box on. So I'm going to tidy this up a little bit just so we can keep it a bit more simple. But essentially, if you were to draw from the previous range, so from the previous internal high down to the previous internal low, right? That's the new internal range we have. So remember, from the previous one, that was the previous internal high, that was the previous internal low, drag it across to where it's broken. So when we got that bullish IBOS, what did we expect? We expected an internal pullback into that level, which is what we got. And now we've got another IBOS, right? So this is where you can clean up. Before we had kind of messy order flow within here, but now we know that this really was the kind of true internal range that we're working within. And now we've had another break to the upside. So now what we'd expect, we get the initiation out of that range, and we'd potentially expect another pullback into that. From an internal structure perspective, this is a strong internal low because it did its job. It took out the high. So from an internal structures perspective, we just could expect a pullback into here, and we just expect that to continue. But obviously using more confluence, we have to be aware that the swing trend is bearish. We're coming into that strong high. So potentially, right, if we get movement like this, we could get in short to try and anticipate that this is going to break, and we're going to take out that low, right? So we got that break in here, we could look for a short within here. But as we're coming into this low, that's where it's getting lower and lower probability to be trying to short into it. Because first you want to see maybe, is this going to hold? Because price could, let's see, price could do this, right? We could get short up here, which is most ideal because then we can remove our risk, because by the time we're then trading into the strong internal low, what could happen? Price could then do that, and then we know it's likely this low is going to hold, and then we'd expect those smaller bullish internal ranges to hold until that weak high goes. Whereas if we got in here and then this movement broke, okay, now you can start to look to scale in or look for shorts, you know, if you're not already in, because now what would have happened? Now you would have had that bearish IBOS. The larger internal structure has then shifted bearish. So then we would have from that low to that high, we would have what? We would have a supply range, and then we would expect those supply ranges to hold until what? Until it takes out the swing low, right? Hopefully that makes sense, but let's see what happens and we can go through price action, because sometimes it's a bit easier to see those real world examples, and then we'll probably wrap it up there because you guys should hopefully be starting to get the hang of it. Okay, so what I was saying, we've had that bullish IBOS. We now know this is our strong internal low, but we're obviously wary that we're coming into a strong internal high. So this is where, just on one time frame alone as well, the swing structure and internal structure are misaligned, right? But this can really help us, like we said, to be more aggressive and potentially get in trades where we previously wouldn't, because if we were looking for longs from, say, if price pulls back into this demand, right, we would go, well, we're buying in the premium, we're buying against M15 trend, so maybe that's not high probability enough. And you still may think that, and there's some circumstances in which that'll be the case, right? So this is where you as a trader needs to decide what meets your risk appetite, your tolerance, and obviously judging it in the overall picture as well with other confluence that we want to bring in from other timeframes, okay? Now at this point, right, yes, we've had a bit of a push down and a bit of a push up, but this is where, you know, you need to really, and this is why it's a bit more advanced, remember, have that nuance between the larger internal structure and sometimes when you get the smaller internal structure as well. So what do I mean by that? Well, I mean, we've got this one big push up because it's all relative to the previous price action. That's what can really help you, right? Rather than pit rules, just look at where we are and look at what the swings look like. Here you can see these are all pretty much the kind of same size swings, right? So that's what I would call the larger internal structure. So then from just purely the internal structures perspective, we would expect that. But what do we have within that? Well, we could have, choose green, right? The smaller swings, which we know makes up the larger swings because price is fractal. So if we come up here and then we were to get that, right? Yes, I would still label that as an IBOS, but it's essentially the smaller IBOS. So for me, that would just signal a pullback down into this strong internal low. So then if the green small structure turned bullish and we got that small internal order flow shifting bullish again, right? And then that would align itself with the overall larger orange internal structure, and then we would expect that, right? Again, we've covered that in the advanced market structure module, so you should be pretty comfortable with that. But let's use order flow, right? Because that's what we're trying to visualize here. So as I would draw this on, showing the order flow continuing, coming up into this level, I would still be wary of the larger order flow. So we get range initiation, mitigation. Are we going to get a continuation? Let's see. So we pull back into it. All right, and this is what I mean. If anyone's trying to get in short here, right, traders, because you might get, you might come into an extreme wick, right? We've got M15 supply. We might get an M1 entry model within here, and that's absolutely fine, right? We can get in short. We don't have to wait for everything to change. We don't have to wait for M15 chalks. We know that, okay? But let's say you get the M1 entry model, and it doesn't tag you in straight away. Price gives the M1 chalk, etc., but it just pushes straight down. It doesn't tag you in, right? Now what's happened? If you understand order flow, and you've seen that price has now pulled into this green demand, and now it's coming back up to you, now you have more information to make a better informed decision. Can you short from here? Yes, of course you still can. This is a weak internal high, so it's lower probability, but obviously it could play out. But what you might want, rather than just whacking on or leaving on your order in here, risk entry, let's say, you might want to wait for another confirmation entry to form from in here to give you more confidence that this high is going to hold. Or you might want to go, well, actually, I didn't get tagged in initially. Price is pushed down into demand. It looks like that internal order flow is going to continue. So I don't want to trade from this weak high. I'm going to wait for price to shift before I want to do that, right? So that we continue up, we take out that weak internal high. Now let's see what happens next. We just break the swing high by about a pip, but we don't have a closure above. So that is not a swing boss, okay? But we did create another demand range, right? Cool. So let's wait for that to see if it will be disrupted. Okay, now it's been disrupted. So now we can draw from the low to the high. And now what do we have? Now we have our supply range because we just need a wick break for, whoops, wrong one. And I drag this in, okay. So now you have a lot more confidence compared to trying to short from this high. We understand that this was weak. We understand that the small internal order flow was still bullish. And now it's shifted bearish, okay? So now you can look for shorts from within here. And that's a lot higher probability than when we're trying to short from here. Also, we've had the sweep, which helps as well. Sweep of external range liquidity, tap into that level, right? And then we can look for shorts, anticipating that potentially what? That we can take out the weak swing low. But what do we know as well? We have to pay attention to the larger internal structure, because it's only once we get that boss there, that bearish boss, that's when we have the strongest confirmation that the pullback is now over, and now we can target this low here, right? Because this is the larger green trend, and it's only once that fails that then the start of that trend, the start of that leg, then becomes weak, okay? So yes, whilst we had the smaller internal order flow within here, right, which then shifted bearish, and that gave us a higher probability short, and we can anticipate this level, we don't want to be holding on really full volume or swinging for the fences, right? Because we understand that this may have shifted bearish just to facilitate the pullback into this strong low, right? So we have another range. And again, this is where we can look for shorts from within here. But we have to be aware of what I was saying. The nearer we get to this low, this strong internal low, the lower probability shorts can become. You can still trade them, they can still play out, but it's just about having that information, understanding that yourself as a trader, right? And making that informed decision. And then we continue bearish again, right? So range, initiation, mitigation, continuation, and it gives us another internal supply range. So this is what I was saying. If you haven't got in here, and if you didn't get in here, you might be wanting to chase it and get in here. Yes, it could play out, but we've had a strong reaction from this extreme of a strong internal low. So if this movement is going to continue, this is where it's going to continue from. So do you want to short from within here? I can't tell you yes or no. That's down to you to make the decision. But now you should hopefully understand why this is much lower probability than here, right? Than these two first opportunities. So this is where I'd personally probably want to stay in my hands and wait and see what's going to happen next in terms of shorts. I'd rather see that movement come down. Then that would be an internal boss, right? So then this would become our strong internal high at that point, right? If we got that boss. And like I was saying before, then we would have this new internal supply range, right? And then we would wait for what? We would wait for potentially the, let's use greens that can help, right? The small order flow to shift bullish, come back into this range, then we'd wait for it to shift bearish, right? Whether that's a chock or a smaller IBOS, and then wait for that order flow to be disrupted, right? And then we'd expect those ranges to hold until that low goes. And then what would that be? Just gonna keep going over this. That would be that larger orange internal structure, right? So then we'd have a movement down, and then the exact same thing would repeat, right? Exact same shit all over again. Excuse my French. Right? But you guys should be familiar with this from multi-time frame analysis. It's all the same thing, and then we would take out that low eventually, right? That would be the idea. But we're just drawing on these boxes to visualize that. Okay, cool. So let's get back to where we actually are. So at this point, for longs, definitely can look for longs from within here. But again, you have to accept the risk. You're trading with a large internal structure from a strong low, but against swing structure. So not telling you should trade from there, shouldn't. It's just I'm trying to give you the information and the framework for you to make better informed decisions compared to maybe the information and concepts we used before, right? Okay, so let's see, because this could easily hold, right? This order flow could easily hold. Bearish order flow in terms of the smaller is still intact because we have the large order flow is bullish, but the smaller order flow is still bearish. So this is a good point to make, right? Once this high goes, or if it goes, that would be the smaller internal structure break, which would then give us confirmation that now we're ready to take out this high, right? Because this is the larger structure, we expect that. But then within that, I know I keep going over it, I know some of you are rolling your eyes right now, but I'm just gonna keep doing it. But then we had this smaller green internal structure, right, let's say. Then that shifted bearish, we got the bearish order flow to facilitate the larger orange pullback. So yes, if we got like a little chalk or even M1 within here, that could be the first sign that this low is holding and we could take out this high, but it's only once we get the break of that nearest smaller internal structure, so that's small IBOS, now everything's aligned, and now if we got to pull back in, that would be nice high probability trade, right, to then target this week high and potentially beyond. Right, so if the penny hasn't dropped, hopefully it's starting to now, okay? So what do we get? A break of that order flow. We also get, a little bullish IBOS. You might also want to, use IBOSes for that as well. And now this is where then you can look for longs to target that week high potentially, because we went from that bearish order flow to bullish order flow here. So from the high to the low, drag it across to where it broke, right? And then that's your new range, and you've got even smaller ranges within there, okay? Fractal range. So price pulls back into there and then continues, right? And then we get another range. And then don't quite close above that yet. And then we get it. So we also get a swing breaker structure. So now the M15 has switched bullish. So that becomes your breaker structure. That becomes your new strong internal low, right? So on and so forth. And you can map all these out with your little dots, right? So that was the larger internal high. That's the larger internal low. And like I said, what happens when every time you get a breaker structure like that, so we've had the internal boss there, the larger internal boss when we broke this high. So what does that give us? That gives us another internal range, right? So from the high to the low. So now what we'd expect, potentially doesn't have to, but price could pull back into here to continue what? To continue that larger internal range. I'll just change that to orange just to kind of try and be consistent with what we were saying, right? If it will change for me, there we go. That's what we'd expect. We've also had a swing breaker structure. So now, if we zoom out a bit, we draw from the swing high down to the swing low, will actually be the lowest point, right? That then went to break on that high. That's our new swing range that we've got on the M15, right? So yeah, and that's basically it. And that's the same format that you then apply to every single time frame. So do we pull back into that range or not? Don't quite, but we obviously, that we don't have to, and we get another range here. Right, so on and so forth. Just play this out a little bit and we'll see how we go. So yeah, I kind of want to leave that. I didn't want this to be a super long video, but I think I've been going pretty long already. I didn't quite go into multi-time frames as much as kind of I initially planned, but I will do obviously more content on this as we go. I think what we have so far should be more than enough for you guys to really, absorb this, digest it. And for me, the key is if you guys can understand like the laws, like the rules, the framework. In my opinion, the rules are very, very, very simple. It's everything we've always used. It's knowing that you have three types of structure: swing, internal, and fractal. Obviously, there can be a bit more complicated scenarios where you can always have large internal and small internal and fractal as well, but it's still the same hierarchy, right? You should know that swing's the strongest, then your larger internal, then your smaller internal, which was these swings within here. And I mean, that's basically your fractal as well, right? Where you'd map on chalk. And you understand what weak and swing highs and lows are. A strong high or low is one that breaks a high or low. So for this to be, the reason why this became a strong internal low was because it took out an internal high, right? The reason why this becomes a strong swing low is because it eventually takes out the strong swing high. But until that happens, obviously this low is weak the whole time. But once that happens, and then we now call it strong, right? And we want to be trading, always we want to be trading from strong structure to weak structure. But there will be times like there was over here where price is coming into this strong internal low, right? And we want to be trading from strong lows, right? So we could get long from here and target the weak internal high. But obviously that's against swing structure because the swing structure was bearish and we're trading into a strong swing high, right? So that's where it's just misaligned. It's just not as high probability. But that's where you as a trader has to decide, do you want to do that or not? Is there enough confluence? What about the other time frames? What are they doing? Because we'd come into a monthly level, we'd had a big sweep of 4-hour liquidity, et cetera, maybe you're the type of trader who is always happy to kind of follow the internal structure. You're aware of the swing structure, but you're happy to keep following it until it changes. And if you take a loss here, so be it. then you would have had the bearish IBOS, and then you can look for the shorts to take out the swing low, right? It's all going to depend on your risk appetite. Also, how big is this internal range? Like, do you have enough risk to reward? Because if you're entering, let's say, with a 2-pip stop, maybe there's only 3R up to this next level. Maybe you don't like that. Whereas maybe if there's 10R up into this level, then you can, that's the risk to reward that's acceptable to you, because then if this small bearish internal order flow holds, but you've already got in long, you've already removed risk, you've already maybe taken some profits, and then this small bearish order flow continues and the swing trend takes over, well, then you're happy, right? They're the decisions as a trader you have to make yourself. But yeah, so I would advise, even though you've probably maybe watched it 3 times already, keep going back through this entire advanced structure, advanced technical analysis module. Go back through the structure videos, especially now we've gone through this. I guarantee you'll pick up on more stuff. Keep doing it literally every month. Go back through the videos. But yeah, the point I was really trying to make with this rant at the end is if you can have on paper and understand the laws here, right? The hierarchy of structure, trading from strong structure to weak structure, and knowing that any change of character signals the start of an internal pullback, right? So let's draw this quickly and we'll end it on this note. So, well, I don't really want to do it because it's going to take me ages to draw it out properly. You guys have the annotated diagrams, right? So that's exactly what I'm trying to get on here. We'll just do it with the price action we've got. So we know that a change of character here, all that signals is the start of the internal pullback, right? Into this low here. It's only once we get the internal boss that signals the end of the swing pullback and the start of the new swing run, right? So chalk just signals the start and end of internal pullbacks. Internal breaks of structure signals the start and end of swing pullbacks. Okay, so what about a small IBOS, right? The smaller internal structure. Well, that just signals the start of the larger internal IBOS because it's the hierarchy of structure. So yeah, if you can get familiar with that and you understand the laws, then kind of no matter how complex scenarios we can get into, if we get to kind of the current price action where price was ranging for a bit and it was within here, and especially when you go through all the different time frames and you can have everything quite misaligned, as long as you understand these rules, and maybe it can be very helpful for you guys to kind of come up with a nice color coding system with your templates, and always have in your live market, where your strong internal low is, where your weak internal high is, where your strong swing high is and your strong swing low is. That can really help you a lot. But if it's all conflicting, it's all confusing, risk reward isn't there, you do not have to trade it. Just because you can potentially have a framework to anticipate what you expect to happen doesn't mean you should be risking your capital on that, right? And that's one thing I'd point that's very hard. It's hard for me as well because you want to get a return on your time invested. You've got up early, maybe you've got a job, you want to escape from that job, you want to make money, you need to make X percentage to meet X goal to get funded, or to tell your significant other one that you are doing well. All this shit that goes through your head, or whether it's just, I got up, I want to trade, I want to be active, I want to make money, as simple as it is, like that, we all have that urge. And then when you have a framework and you're sitting there saying to yourself out loud, well, this is a strong low, I expect it to hold, this is now aligned, I expect price to do that, you can almost talk yourself into a trade, okay? So it's not the end of the world, but I would say when you're learning these concepts, I would spend weeks, if not, a little good while, months, just practicing doing what I just said. Literally just label it, say your expectations out loud, or write them on the chart, and just get very comfortable with seeing it play out over and over again. Then you'll start to get a very, it's that sixth sense of which POIs are going to hold, how big of a reaction is it likely to give, is that the type of trade I want to go? And that's why it takes the majority of people quite long to get to that consistently profitable stage, because anyone can learn the technicals. You don't need to know any of these technicals to be very profitable. That's what you literally say at the start of the course. Just take the M15 time frame, just follow pro M15 trend from the extremes, and over the course of a year, you will be profitable. But it's when you want to take it to that next level that, yes, you can smash through this content in a month and you can test it and maybe have it down, but it's only when you've seen tons and tons of real life examples and you've traded through them and you've really paid attention to it all, that's when you can actually actually trade profitably and consistently for a long time. Because when you're blasting through it, back testing, and you're playing a bar replay, it's all very quick. You're not dealing with how price is then putting back when you're in the position, and emotionally what it's going to mean for you and all these things. I'm going on a bit of a tangent here. So yeah, what I'll end up with is just work on one time frame. If you smash through this content, just take the M15 or whatever, and just literally draw it all on like I just have for the last 20 minutes, half an hour. Then slowly maybe bring in one other time frame, and just get used to it. And like, just focus on, say, the swing and the large internal structure. Maybe don't get too caught up with like the smaller, because that's when it can get very, very confusing. And just go from there. You know, we'll take it step by step, obviously, with the whole community starting to absorb these sort of, you know, slightly more advanced way of looking at price. And obviously, I'm sure we'll refine this even better, and we'll turn it even to a more simplified and refined concept as well for us to use, and we'll find better ways to teach and convey the topics. And we will do some more examples, obviously really drilling in from top down all the way into entries and then management. You know, that sort of content will be coming, but for now I think you guys have got more than enough content to take away, and you know, just test it yourself, have fun with it. You don't need to do bar replay, literally just zoom out and like just practice on one time frame, like just trying to like do multi-time frame analysis with just one time frame, looking at the bigger swings, right? Knowing that this here, this whole range, this here is going to be what? That's going to be your 4-hour internal range, because this is here, this is your 4-hour swing structure. So you know that that's the 4-hour bearish range. So you can put on like your high time frame supply. Whoops. Let me try and get it right. There we go. And you would have that as your, say, your 4-hour swing high. Like draw it all on, you know, take your time, not gonna do it all now. Right, and then you can go, okay, well, we're expecting that to come in, and then you would obviously have all the M15 switching bearish, and it switches bullish, and then it breaks to the upside. But you know that although we're coming into the 4-hour strong swing high, what's the 4-hour internal structure doing? The 4-hour internal structure is bullish. So we're coming into extreme 4-hour supply, right? We maybe the M15 switches bearish, and then we can look for some shorts within here, right? And that could be the move that then went on to take out the weak 4-hour swing low. But because we understand internal structure, and we understand that the 4-hour internal structure is bullish at the moment, it's bullish order flow on the 4-hour chart, that although we get short at any moment, that could just be to mitigate the 4-hour internal demand to then continue to the upside. So then if we zoom into the M15, right, and then we start to get those breaks of structure and disruption of the order flow in the M15, and then that order flow holds, we can start to look for longs to potentially anticipate that we're going to take out that weak 4-hour internal high, right? And then that would be your 4-hour next internal demand range, right? And yeah, and that'll be it. I don't know if that's going to show up on the 4H or not. Let's have a quick look. No, just the drawings did. But yeah, I'll just quickly go over that again so you guys can see what I was talking about. But essentially, right, that would be at this point in time, 4-hour would have been bearish. We were coming up into extreme supply. But if we look at the large internal structure, what was it doing? It was still bullish. So although we can take shorts from within here, as it's pulling into this range, we have to anticipate that well, this is a strong 4-hour internal low that could hold. Range, initiation, mitigation, continuation, and then we end up switching bullish, right? So yeah, I'll leave that there. A lot for you guys to digest and take in. I'm excited to hear your feedback and see how I get on with it. And yeah, enjoy.